Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, September 18th, 2025, we're tackling Amazon, symbol Amazon, a true titan in both e-commerce and cloud computing. We'll start by breaking down the latest news influencing Amazon stock, then jump straight into the charts across multiple timeframes to uncover key trends, crucial price levels, and potential trading opportunities. Let's get right into it, showing the daily chart for Amazon with all available data. Starting with the news, a significant development just broke. A judge ruled that Amazon violated consumer law in a prime billing case. This is fresh news, indicating immediate legal pressure on the company's established subscription model. Compounding this, just last week, on September 10th, Amazon stock fell amid concerns over market share losses to Oracle in the highly competitive artificial intelligence space. Cleveland Research pointed out that Amazon is underperforming in AI, facing increased multi-cloud adoption, while Oracle surged 40% due to its neutral AI strategy and key partnerships, underscoring a critical challenge for AWS. However, it's not all negative. Just 2 days ago, Truist Securities raised its price target on Amazon to $270 from $250, maintaining a buy rating, citing strong revenue growth and no slowdown in demand, which provides a strong counter-narrative for its retail sector. Also, Amazon announced its fall Prime Big Deal Days, a major retail event that typically boosts consumer spending and investor confidence, offering a clear catalyst for future sales. The market is clearly grappling with these conflicting signals, legal and AI headwinds versus retail strength and analyst optimism, making for complex trading decisions. Now, let's connect these headlines to the daily chart. Looking at the long-term trend from May 2024, Amazon has shown significant volatility, reflecting the dynamic nature of the tech market. We can identify a sharp decline around August 1st to 2nd, 2024, which aligns perfectly with discussions around its second quarter earnings in late July and growing concerns about AI competition, especially from Oracle. The stock dropped notably from around $190 to roughly $160 during this period, indicating a strong negative reaction to those events and highlighting investor sensitivity. Following this initial dip, Amazon staged a strong recovery and rallied impressively into early 2025, reaching a 52-week high of $242.52 in early February. This sustained climb likely benefited from the positive sentiment surrounding its core retail performance and perhaps early whispers of upcoming sales events. However, we then observed another dramatic and sudden drop in early April 2025, where the price plummeted from approximately $196 down to its 52-week low of $161.38 in just a few trading days. This sharp reversal highlights a period of intense selling pressure, potentially exacerbated by broader market anxieties or company-specific news that was not explicitly detailed in our recent search, signaling a major capitulation point. Since that significant April low, Amazon has staged a remarkable recovery, consistently pushing back towards its previous highs with strong buying volume. This robust rebound clearly reflects the underlying strength cited by analysts like Truist Securities, indicating that despite recent setbacks, many long-term investors remain fundamentally bullish on Amazon's diversified business model. The current price, as of September 17, 2025, closed at $231.62, showcasing this recovery, but also a recent pullback from its early September highs, suggesting continued battle between bulls and bears. Let's narrow our focus to the shorter term using the 1-hour chart to examine the very recent price action more closely. Here, we see a clear and strong rally from late August into early September, pushing Amazon from around $228 to its local peak of $235.68 on September 4th. This upward momentum was quite pronounced, indicating consistent short-term buying interest and positive sentiment leading up to that point. However, immediately following this peak, the stock began to show signs of exhaustion and started to retreat, signaling a shift in short-term control. This recent pullback is further clarified on the 15-minute chart, specifically looking at the last few trading periods. On September 17th, we witnessed significant selling pressure almost immediately, with the price opening around $233.77 and dropping sharply to a low of $228.71 before recovering slightly to close the day at $231.62. This distinct sharp intraday decline strongly correlates with the breaking news of the prime billing lawsuit, suggesting immediate market apprehension and a rush to de-risk. The immediate support level that was tested and partially held today is around that $228.70 mark, which will be crucial moving forward. Shifting back to the daily perspective to identify crucial price levels, we can establish several points of interest for traders and investors alike. Immediate resistance can be seen at the recent local high of $235 to $236, where previous rallies have stalled. A stronger overhead resistance looms at the 52-week high of $242.52, a level that will require significant bullish momentum to break. On the support side, today's low of $228.71 will be a key short-term level to watch, acting as a first line of defense. Below that, historical price action suggests significant support around the $220 to $222 range, which served as a consolidation area earlier in the year and now represents a strong psychological and technical barrier. Further down, the $210 level could offer a more substantial floor, and the multi-month low around $160 to $165 remains a critical long-term support zone that, if retested, would signal deep bearish sentiment. For short-term traders, the volatile price action around the $231 to $233 range on the 15-minute and hourly charts indicates that buying near $228.70 support or selling into $235 resistance could offer quick opportunities. It is crucial to use momentum indicators like RSI or MACD to confirm entry and exit signals, especially after such a news-driven move, to gauge overbought or oversold conditions. Monitoring volume during these intraday moves can also provide insights into the conviction behind any potential breakouts or breakdowns. In the short term, a bearish outlook for Amazon is likely if the price breaks decisively below the $228.70 support, with a 65% likelihood, potentially heading towards the $220 to $222 zone. This downside move would be strongly reinforced by continued negative sentiment from the prime legal issues or any further adverse news regarding AWS AI market share dominance, suggesting a loss of investor confidence. Conversely, a bullish reversal could occur if Amazon manages to bounce strongly from current levels and reclaims the $235 to $236 resistance, with a 35% likelihood. This positive shift might be triggered by strong early positive sales figures from the prime big deal days, or an optimistic update regarding their strategy in the AI competition. For the long term, the bullish case for Amazon is strongly underpinned by its diversified business model, unparalleled brand recognition, and consistent revenue growth in both its vast e-commerce and robust cloud services segments. Successful implementation of its upcoming prime big deal days and continued positive analyst sentiment, especially the $270 price target by Truist Securities, could fuel a sustained push towards new highs, giving this a 60% likelihood, assuming no major economic shocks. However, a significant long-term bearish scenario, with a 40% likelihood, could unfold if the AI market share losses to Oracle accelerate considerably, or if the prime legal issues lead to substantial, unforeseen fines or a forced change in fundamental business practices, potentially pushing the stock back towards the $160 to $165 lows seen in April. To recap, keep a close eye on the $228.70 support level for immediate reactions, as a decisive breach of this could see further declines towards $220 to $222. On the upside, $235 to $236, and then the pivotal 52-week high of $242.52 are critical resistance zones that bulls will aim to challenge. Upcoming events to watch closely include any further definitive updates on the ongoing Prime legal case, Amazon's public response to the intensifying AI market competition, and, crucially, the detailed performance metrics from there. Prime Big Deal Days retail event. These interconnected factors will be absolutely critical in determining AMZN's trajectory and overall market sentiment in the coming weeks and months. Thank you for watching Explain the Charts, and always remember to conduct your own thorough due diligence before making any trading or investment decisions.